Hello and welcome to marketing91.com. Need for CSR, better public image, long-run self-interest, minimizing environmental damage, and avoiding government regulation or control. Aspects of CSR. CSR has four broad aspects: responsibility, accountability, sustainability, and social contract responsibility. Responsibility. Social responsibility refers to a firm's obligations to adopt policies and plans of action that are desirable in terms of the expectations, values, and interests of society. A firm can fulfill its social responsibility in the following ways: discharging its obligation to its employees, fair advertising, economical prices and quality merchandise for customers, generation of employment opportunities in society, and donations to orphanages, NGOs, etc., and contributions to educational institutions and research centers. Accountability. Accountability includes a firm's system for developing policies, indicators, targets, and processes to manage its full range of activities. It covers emerging CSR issues such as business ethics, diversity, marketplace behavior, governance, human rights and labor rights, as well as financial and environmental performance. There are 8 main types of corporate accountability: moral, administrative, political, managerial, market, legal, constituency relation, and professional accountability. Sustainability. The concept of sustainable development requires development that meets the needs of the present without compromising the ability of future generations to meet their own needs. Corporate sustainability refers to a firm's role in achieving sustainable development and entails a balanced approach toward economic progress, social progress, and environmental stewardship. Green Globe. Green Globe 21 is a worldwide benchmarking and certification program that facilitates sustainable travel and tourism for consumers, firms, and communities. It is based on Agenda 21 and the principles for sustainable development that were endorsed by 182 governments at the United Nations Rio de Janeiro Earth Summit in 1992. It specifies 10 areas in which travel and tourism operations could contribute to society, including waste minimization, management of freshwater resources, wastewater management, energy efficiency, conservation and management, and treating hazardous substances. Triple Bottom Line or TBL approach. Triple Bottom Line, TBL or 3BL, is an accounting framework with 3 parts: social, environmental or ecological, and financial. Many firms use TBL to evaluate their performance from a broader perspective to create greater business value. TBL consists of 3 P's: profit, people, and planet. It aims to measure a firm's financial, social, and environmental performance over a period of time. People or human capital. This includes fair and beneficial business practices towards labor and the community and region in which a firm operates. Planet, natural capital. It includes sustainable environmental practices. And lastly, profit. It includes economic value created by a firm after deducting the costs of inputs and tied up capital. From the viewpoint of sustainability, it is considered the real economic profit enjoyed by the host society. Social contract. Firms are expected to operate with a profit motive and to comply with governmental laws, rules, and regulations. Archie Carroll proposed a 4-layered pyramid model of responsibility. In this model, one type of responsibility cannot be achieved if an underlying responsibility in the pyramid model is absent. This pyramid model is organized as follows. Level 1. Economic responsibility. A firm must survive by producing goods and services at a profit. Level 2. Legal responsibility. A firm must operate within legal and regulatory frameworks. Level 3. Ethical responsibility. A firm has responsibilities over and above those codified in laws that are in line with societal norms and customs. And Level 4. Philanthropic responsibility. A firm has responsibilities above and beyond its basic motivations, such as making efforts to benefit society. Social accounting involves measuring and reporting information about the impact of a firm and its activities on society. It is defined as the identification, measurement, monitoring, and reporting of the social and economic effects of an institution on society. Social accounting deals with internal and external reporting of social costs and benefits in both quantitative and qualitative terms by a firm. The features include: indicates a company's social responsibilities, related to use of social resources, focus on relationship between firm and society, determines a firm's desirability in society, applies accounting to social sciences, and focuses on social costs and benefits. Issues or challenges in CSR: lack of community participation in CSR activities, need to build local capacities, non-availability of well-organized non-governmental organizations, narrow perception towards CSR initiatives, reporting structure, no concrete database of credible implementation partners, political and administrative interventions, and no yardstick for beneficiary satisfaction. What qualifies as a CSR activity? Livelihood enhancement and rural development projects, promoting preventive healthcare and sanitation, measures for benefit of armed forces veterans, war widows and dependents, working toward protection of national heritage, art and culture, reducing inequalities faced by socially and economically backward classes, protection of flora, fauna, animal welfare, agroforestry, etc. Do's and don'ts: surplus from CSR activities cannot be included in profit. CSR activities can be performed through a registered trust or society or a separate company. Companies can other companies, but activities must be reported separately. CSR expenditure must exclude those incurred during normal business operations. Political contributions are excluded from CSR expenditure. Companies must report their CSR policy, projects undertaken, and amount of time spent in board's report and on their website. Thank you.